Good morning, everyone. I wanted to hop on today to kind of walk through a setup and kind of what I was looking for on the S&P 500 for this morning's trading. There was again, in my opinion, as I understand it, going through the ICT Mentorship on his YouTube channel, there was a perfect fair value gap trade, again available on the 1 minute chart for the S&P 500 that kind of played into exactly not only just the pattern of the fair value gap to look for, but it also had the most important part, which is time, price, and narrative. Like you could explain why price did what it did, and then time and price aligned, and the move worked out. So I want to go ahead and walk through that today, and I'm going to start with just a plain naked chart. In my previous videos, I've kind of already showed like the things marked up. So this time, as I think it might be a little bit more beneficial to kind of like walk through, marking up the chart and like how I was looking for this setup this morning. So essentially, this is the 15-minute chart on S&P 500. So the first thing to notice is this is Friday's high. And I'm going to just go ahead and change this to my colors here. But you see, so we were doing the Asian range on Sunday's open, and we traded up in through that high and through the Asian high. Okay, so we brought buyers into the market, tapped into that buy side liquidity. And if you look even further left, there's also a fair value gap right in here. So to me, that was kind of a signal for lower prices. Okay, so then the other really important thing that you probably noticed is there is a gap right there from Sunday's open. So Sunday trading started right here, and so it just gapped up and then started running throughout the Asian session, established the Asian range, which as we said, it had already traded through the Asian high there, and then during London, it came down and was trading through the Asian low. So we've tapped in buyers, we've tapped in some sellers, and then it started going higher, presumably kind of squeezing out people that were, going short already that got tapped in here. But still, my target was this gap right here, as I wanted to see price go into that gap, presumably all the way to the bottom. But I'd at least like it to go pretty deep, like 50% of the way in through. So that's kind of what I'm going to use to frame this trade idea. So you're dropping down into the 5-minute. You see, this is where we took Friday's high, the Asian high here. Which, just for the sake of completeness, I'm going to go ahead and just put a line on there. So that's the Asian session high. So we took both of them here, and then technically, to me, this fits ICT's thing, is we had a high, a low, we took the high, we dropped below the swing low, leaving behind a fair value gap. So this isn't necessarily important to the first trade I'm showing, although technically it did tap it there, so you could have gotten short right there and held it through all of this, and and eventually it does, as you see, it does go lower. So there was a fair value gap there, but that's not the main one I was paying attention to, because you would have been tapped into the trade at 7 a.m., which is outside of my kill zone that I look for. So on the 5-minute, here we see, actually I'm going to drop down, just straight down into the 1-minute actually. Or actually, no, sorry, let me go back up to the 5-minute. So what I want to show here is we took the buy side here, established this high, and then coming down through the Asian low, we established a swing low here. So what we did is we established our dealing range. This is the range that we're looking for premium and discount for the morning's trades. So as you can see, we came down and then premium was right here. So we went up into a premium. So I would be looking to see what we're doing here. We're getting close to that fair value gap. So what I wanted to do is see what we did, so 8:30 in the morning, you start looking left. This was a high right here. This was an area of interest. So we look up, we made a swing high, made a swing low. So let me go ahead and mark those off, right? So swing high, swing low. Okay, both traded through the swing high, traded through the swing low, and what did we leave behind? A fair value gap. So we traded up into a premium. The fair value gap pattern presented itself, and we'll draw that forward in time. Okay, so now what we're doing is 8:30 in the morning, we're basically waiting to see if price comes back up into this area of interest, right? So what we can see is happen is it comes down, establishes this range here, trades back up, kind of stays in that range, and then at 8:30, price dropped down. Actually, let me add one more thing on here, the ever important 9:30 New York open here. So 9:30, price trades down rather violently, takes all the sell side liquidity out, trades up back past this buy side liquidity, but you see it comes into our fair value gap and leaves this high intact. So this would have been the area I would have been looking for entry. So then to mark up the trade I would have been looking for essentially would be, I like to get in right at the very top point of the fair value gap. My stop would have been above the high, because again, it shouldn't go up there. And then you might be saying, well, the take profit, obviously, as I framed, was going to be down here. So what I would do to determine that is, like I said, I want it to close it in, but I would settle for 50% would be the first area I would really be looking. So what I'm going to do is I'm going to use the fib to essentially mark out where the 50% would be, and it's at 3907.25. So what we're going to do is we'll change this to 3907.25. Okay, so then we've got our trade. So let me go ahead and draw this forward, or move this forward, so that we can see what time it would have activated and how long the trade would have taken, how much drawdown we would have had to endure, all that. So let me go ahead and just clean this up a little bit. Okay, so as we can see, this was a 15.5 to 1 trade. The trade would have triggered at 9:48 a.m. and would have been closed by 10:03, so 15 minutes for a 15.5 to 1 trade. So if you risk 1%, that's over 15%. Now obviously you'd probably, you might give a little padding up on the stop, maybe raise the the take profit up a little bit just to account for spread and things like that. But yeah, a really solid risk to reward ratio. So the entry would have been 39.46. It looks like the highest one of these candles got was 39.47. So 39.47. So basically one full point of drawdown is the max you endured out of 2.5 points. So it got about 50% to the stop loss. But as you can see, the bodies respected this fair value gap really nicely. Only pushed maybe about halfway up into it, and then it dropped and ran straight into the fair value gap, which was right here. So, and again, down to the 50% mark, and then it started going away from that. So by the 50%, I probably would have taken some partial off here at this low, maybe taken a little bit more off at the top of the fair value gap or at the close of this candle right here. but the majority of my position would have been off at the 50% mark. And then I would leave like maybe 10%, 20% or so running, just to see if we could get down in here. Or like I said, if we back out to the 15-minute again, I mean, there's a lot of gaps and stuff down here from Friday's trading. So I do think, price will come down here at some point to fill some of that in. But I would have had the majority of my position off here. Because at that point, like I said, we would have taken the sell side liquidity again. So, it should come down here at some point, but there's also the chance that it will take this buy side liquidity here, or sell side liquidity here, I'm sorry, and then start going back up, rallying higher to start searching for more buyers to tap in. So that's kind of a trade I saw this morning. It was the one ideally I wish I could have executed on. I did not see that one real time. I kind of missed that one, but marking it up in hindsight for my study journal, for sort of like back testing, and I thought I would mark it up and share it here for everyone to look at and analyze and maybe save to your study journal. So let me know what you think in the comments about this setup. If you did catch this, if you were trading S&P this morning or any of the other indices. If you have any questions about this markup I did, if you liked that I marked it up kind of from a naked chart, kind of adding everything to it as opposed to starting with the chart already marked up, or just about any trades or pairs or setups or anything you were looking at, any where you're at on your trading journey, if you're an ICT student or not. I would still love to connect and talk to other traders and stuff. So that's all I got for this morning, and until I talk to you next, stay safe and happy trading. Thanks.